and center this hour. Markets on edge today, as you know. We're following the fallout of Israel's attacks on Iran, the impact on stocks and other asset classes today. There are many. Joining me for the hour, Steve Weiss, Shannon Saccocia, Sarat Sethi, and Rob Sechin. You know the thing we're playing with today, the backdrop. Oil highest since January. You know, yields are up, maybe on the oil surge. An inflationary move there. The dollar's higher on the safety trade. The gold is highest level since April. And then you have UBS saying, try to look past what's happening here, that the impact on the market should fade fairly quickly. That's what they suggested. How do you see it?
Look, I've been in the business almost 35 years. We've seen a number of flare-ups in the Middle East. Every single one of them has been buying opportunity. Now, there's talk that this time will be different because it's going to go on for possibly 2 weeks. But at the end of the day, the result's the same. And I think you see it in the recovery of the indices today, particularly in NASDAQ, that that's the case. I'm not concerned about oil. You know, if I were a trader in oil, I would have sold the pop. I'd probably still sell it. And it was clear, and Trump admitted it recently, that the U.S. knew about this.
Well, oil was trading over the last at least week as if the market, quote unquote, knew something was going to happen, because you had a bid and a bid and a bid and a bid, and now you get the spike on the actual news.
Right, and despite that, it's a great point, despite the Saudis continuing to say they're going to pump and pump and pump. So, look, I wouldn't be surprised if they were saying that to calm the markets in advance. But here we are, the Saudis, who are also not friends of Iran, will do what they need to take oil prices down. But even if they don't, the Fed is not going to look at oil prices and say that that's going to derail us from whatever they were going to do. It's going to be a non-factor. It's transitory, as they'd like to say. So it was a good opportunity to at least trade this morning, and I sent that note to you and the others at CNBC, and I think it's business as usual.
You get past this, Weiss, and then you sort of focus back on the big picture of why Altimeter's Brad Gerstner, who was with us yesterday, reminded all of us as to why he's turned so bullish on these markets. I want you to listen to what he said in total. Why has he increased his exposure so dramatically and taken whatever sort of hedges that he had off? Here's why.
We have the AI super cycle. We've seen a reacceleration in both the top line and the earnings. You know, Oracle reported last night, blockbuster numbers. 80% of the S&P that reported all beat. The Mag 7 all beat and accelerated. And so I think that, you know, so long as the government does these things that I describe, I think the economy's ready to cook. We have these rate cuts coming in the back half of the year. So I think that's the potential trifecta for this economy, an incredible pro-growth administration that is landing the plane on tariffs, that is landing the plane on the reconciliation bill, and we have rate cuts ahead. That caused us to get a lot more bullish at the beginning of May. We remain so today.
All right, so that's Brad Gerstner. Now, obviously, the tariff issue lingers. Right. The tax issues linger. We don't have any rate cuts yet, but that's the bullish scenario. Are there cracks in it, or is he right to be focusing on the big prizes at the end of the rainbow here?
Well, I'm saying I'm fully invested now and have been for a little while. Look, you know, it depends what happens. As optimistic as Brad is about the market, I can tell you that the CEOs that I talk to often, the bankers I talk to often, private equity funds, large ones I talk to often, are not as optimistic on the economy, number one. Number two, there's nothing that has happened, and as a matter of fact, it's only gotten worse in terms of keeping CEOs from deploying meaningful capital in Capex.
Do you think it's gotten worse? I'm not sure I agree with that.
Well, okay, let me say it this way then. It's not gotten better, right? Taking China down from 145% to 55%. And what I mean is it got worse is that there's been no off-ramp in terms of Trump's continuing to talk about tariffs, how they'll be penalized, how if Europe doesn't come to the table, and yada, yada, yada. Now, the market's been desensitized to it, and taco is alive and well in the minds of investors. So So from that standpoint, it's gotten better.
But even from a Capex standpoint, speaking, well, let me just say this. I mean, I know you speak to a lot of CEOs in the business that you're in. But I spoke to the CEO of, now I know it's a specialized area of the AI supercycle, but I did speak to the CEO of AWS this week.
They have no choice.
They just committed $25 billion in a handful of days, on top of the billions more that they continue to dole out for this big build out of data center and the chips that they're making and everything else, just representative of no slowdown in that perspective or procurement.
There's been an acceleration, actually, in AI.
Isn't that making the point, to Brad's point?
Well, it's making the point is that, as you started, it's a very unique area, right? And AI, which is why my top positions are Meta, they're Microsoft and others that play in that and have remained my top positions. So that's unique, and that will filter down to others. Like we own part of an electrical contractor company that really primarily their work is in data centers. So we expect to see that continue. But in terms of the industrial companies, even though I bought the XLI, which I talked about earlier in the week, and I bought CAT, to me, they're the ones that are not deploying capital.
Hey, maybe those aren't the stocks to be in, right? That's part of the psychology of the market right now.
Right.
Is you once again have to find yourselves in the right stocks.
Right. And I've never wavered, not at all, even when people are talking about the temporary rotations in industrials, even though they've done quite well recently. I've never wavered from saying that the fortress balance sheet tech companies will be the ones that continue to thrive, and that they may be momentary setbacks, but that's all they'll be because they've got growth that will survive regardless of what happens with the economy. So I continue to like those, but CEOs just aren't deploying CapEx aside from in AI and AI-related companies, just not doing it.
Barclays Animal Spirits could fuel the chase for additional upside. Chris Harvey, Wells Fargo, has maintained and continues to his view that tariff concerns may be overstated. He has, in the face of everything, stuck to his, now I don't know how realistic he really thinks we're going to get there. 7,007 remains his target. He's one of the only, if not the only, strategist who hasn't done anything. He just sat back, he observed, and he said, you know what, I think the second half is going to be much better. We're going to clear some of these issues. We're going to focus on the Gerstner prizes, and we're going to have a better second half of the year than we did the first. The S&P, what are we up, 2% year to date?
It's easy to buy into that view, but I focus on one thing, Scott, that has served us really, really well. And that's institutional positioning. And it still remains underweight risk. So I agree. They talk about this pain trade. They talk about markets climbing walls of worry. And we all know there's plenty to worry about. But the pain trade is higher. Institutions will get drawn in as there's resolution of these various things. And as long as there's not some seismic shift in one of them, which is why I mentioned energy prices at the beginning of the show, as long as there's not seismic positioning shift there, investors will get drawn into markets. What causes assets to go higher is fund flows. You will see that. And so there are some gating issues. The gating issue is valuation. But valuation is a terrible, terrible timing tool. So I think we can definitely see that play out. And who knows, if it comes with resolution at the end of it to a lot of these worries, we're going to be at a vastly different valuation level on the S&P than we are today. And I think it will be higher. Obviously, you can't ignore those other things, so you're paying attention to them. One other thing that I would say is earnings, right? We're seeing earnings re-rate positively, estimates going up on the growth side of things, and estimates getting trimmed in value, small, mid. So it's no surprise to us either that we've started to see that outperformance. You know, a little bit of it's narrative, a little bit of it's because that's where investors want to be, where the super cycle is. But a lot of it is just these companies are doing better at the margin. There is enormous operational leverage, though, on clarity for these businesses that will leverage AI. And ultimately, if you don't own them, you will miss the opportunity, because there are great companies that are trading at significant discounts to our most popular friends.
You and Weiss are right. I mean, many big names and big name institutions are negative. I mean, sentiment is not universally bullish. even as we're 2% away from a high, the people who follow it, talk to, and keep a close eye on all of those cohorts suggest the same thing, whether it's Weiss talking to CEOs, Adam Parker talking to institutional investors, Bank of America's flow show today. How about this? Biggest outflow in U.S. equities in 11 weeks. You don't have everybody on the same side of the boat here, folks, even though some of the commentary in recent weeks may have you believe that. You still don't. IPOs are coming back.
They are.
Chime yesterday, we could show all these charts.
They've been successful.
As I talk about these. Voyager closed up 82%, but there's Chime. We need to look at Chime more than just intraday, guys, please. Can we look at this week and see what Chime did? Not today. Voyager was big, Circle was big, eToro was big, and the pipeline looks pretty rich. Very
robust, which is why I traded a little Goldman. It's a core position, but it was down $9. There's an opportunity to take it. Look, the IPO market is coming back. That is actually one of the risks that when you see so much supply come into the market, what happens to other stocks. So the weak sisters, the weak holdings, they will get rid of those and try to make it in the IPO market. But Scott, there's one thing we haven't talked about, which is the consumer. And
we're going to do that later.
Okay. So we'll
do that later. Good tease. Good tease. I'm glad you read the doc before the show rather than during it.
Well,
anyway, please go ahead.
But back to the IPO market. That is always a risk. We see it acutely in biotech, where you have big biotech issuance cycles, and it kills the indices. I think it'll be more measured here because of the number of stocks that we've taken out of the indices over the last 10 years. So there's room, but clearly, you're going to see major beneficiaries in Goldman Sachs primarily because of how narrow their business is, Morgan Stanley, et cetera.
Okay. For the day, maybe the best stock in this market. I know Josh has his list, but I think I'm going to have mine. Netflix. 1425 is the target, was 1200. Oppenheimer, you could just add them, Weiss, to the list of companies that have chased this stock on the up and up. Let's take a look at a year to date, please. Weiss.
Look, I mean, the stock, I want to say it weakened a little, but it's still on a percentage basis, really trading at size. But it weakened a little when the Hulu news started coming out, and that made no sense. So to me, this is a perma hold. It's a permanent compounder. They still own this space. They're number one in it. And as the economy gets tougher, and we'll talk about the consumer later, I believe, Scott, but as the consumer, as it gets tougher, they're going to decide, where do I want to spend? They've got their ad-supported streaming service. I just think that this one is, is one that looks great.
Yeah, it's been offense and defense.
Yeah.
And there aren't that many stocks in this market that have been able to accomplish both. Given all of the news flow and the headlines, it's just managed to stay above the fray. Even if you're concerned about the economy, now that you have other tiers, like an ad tier, okay, you don't want to spend the full freight, go ad tier, and you're still getting the subs. And
it's recession resistant. You still have cord cutting. I mean, we're beyond the bulk of it, but it just has so many tailwinds.
NRG, outperform Raymond James, 326, not 325, Rob Sechin, but 326. I don't think it's a typo. 326 is the price target here. What's your take?
I think that's right. Listen, this is a company that we added in January of this year. It's up 69% since. Second best performing stock to Palantir. When we look at it, natural gas will be the key to solving the bottleneck in data center power consumption. And NRG is incredibly well positioned for that. Its valuation's no longer cheap. It's still at 18 times. There's a multi-year story. It's benefiting from both increased loan growth and consumer data center power consumption. So we like this, and it's a little cheaper than Vistra, which we also own, and sold to buy this, a little bit of it to buy this.
Air Products, Surratt, initiated outperform 355 at RBC. They're bullish on 1, the return to the core industrial gas model. 2, the turnaround plan. 3, re-rating to 25 to 30 times PE multiple. What do you think?
So 1 and 2 is really important to the story. You've got a new management team in there that is now focused on the core business. They got rid of all their other businesses outside the U.S. that were not cash flow producing. The other part that was not mentioned is an industrial gas company like Air Products has long-term contracts. When you have long-term contracts, you secure the future revenue, and you also have inflation hedges against them. So that's why a company like that deserves a premium multiple. Their comp is Linde, which trades at over 30 times earnings. If they can even get close to that, you're going to see a good pop in the stock, and you get paid 2.5% dividend yield while holding it.
Rob, Wells Fargo says AbbVie is a signature pick. They say it again. They reiterate it. $240 is the price target. Thoughts?
It's up a good bit year to day, up 10%, really outperforming the market. PE's 15 times. It's a high-quality pharmaceutical company with consistent top-line growth off of Skyrizi, Rinvoq. They're also focused on Botox, arthritis. It's a high-quality business. I think this is one you can own. The total dividend yield's 3.5%.
That chart looks pretty good, I'll tell you.
Of AbbVie?
Yeah.
That seems to be the most favored biotech / healthcare related name on the desk.
Yeah, without a doubt. I may be the only one who hasn't owned it over the last 5 years.
You bought back UNH, is that true?
I did buy it back, and as you recall, when I sold it, I wanted to see if there were any other skeletons in the closet, so to speak. They got through their analyst day, their investor day. Some had thought that they'd pre-announce and give guidance, but that'll be in the second quarter. Again, I know Steve Hemsley, who's CEO, I know John Rex, who's the president, CFO. Very steady hands on the wheel. And look, they made a mistake in underwriting the amount of business they took. And V28 is largely behind them at this point, but it's going to be a kitchen sink quarter, and the guidance you can count on. So that will be the relief rally, and you'll see it continue to move up. I actually bought some more today.
You got any other cliches? Kitchen sink,
no, but
quarter,
there are certain names I want to drop. So
skeletons in the closet. Clean bill of health. You didn't use that one. You didn't use that. You gave them
well,
that.
I thought it was too close to home with a healthcare company.
Okay. Let's talk streaking stocks, both up and down. IBM snapping its 9-day win streak. That's a record high yesterday. That stock, Rob Sechin, has just been on a tear. A tear.
We added it a year ago, Scott. It's up 71%. It's more fully valued today at 25 times. Still a great business. They're seeing modest revenue growth, margin expansion, and valuation, but they're a beneficiary of this effective transition from a consulting-led business to a software-led, AI-led business, and emerging as a leading quantum computing play as well. Name we continue to believe in.
Yeah, I mean, Arvind Krishna is probably the tech CEO not talked about nearly enough. All the focus centers around the Mag 7. And he's done a great job. There's no other. The chart tells the story, right? The chart don't lie. Other stocks on a streak. 6-day win streak for Suncor. Seach, that's you, along with Eli Lilly's on a 5-day win streak.
Both those names continue to do well in the portfolio. Suncor's really cheap. Overall, it's a little harder to get too excited about the energy space. Obviously doing great today. There's still a lot of reasonable valuations there. High single-digit yields, as we've seen. Lilly, you know, we trimmed a little. It's down from its peak at 50 times, trading at 33 times today. Still a great business. They are the front runner in the GLP-1s, and we still think that's an enormous secular opportunity. They have a 60% market share there.
Surratt, Bristol, CVS, Danaher, Thermo Fisher. 5-day win streaks, you have all of those.
Yeah, but if you look at Thermo and Danaher, they're both down 20%, the whole NIH overhang on them. So still very high quality companies. I like those. They are growth companies longer term, but they're kind of in the doghouse now. CVS and Bristol, single-digit multiples. They've been out of favor too. CVS, as we know, got hammered last year. It's come back a bit this year. It's up about 10%. And Bristol, you're just playing a bet on the pipeline.
Rob, Ping Insurance, a 4-day win streak.
Hang on. You kind of poked me on this one when I added it on the show. Scott, if you remember,
I conveniently don't.
Very diversified insurance company in China. China's obviously a market that's done really well this year. The story here is a 6 times PE and 50% free cash flow margins for one of the largest companies, insurance companies in the world. So exciting to see that it's up 40% since we added it.
What was my pinging about? Do you remember?
I don't remember. I think because you've never heard of it, you were just jabbing at me a little bit. So.
Okay, that's fair. Fair. I mean, it's all fair. All
Any
on the table.
opportunity, Rob.
That's right. 4-day losing streak, Amex.
Stock's up 30% for the year. You've got some profit taking. Company's done really well, firing on all cylinders. They're in the right part. So I think it's just some money coming off the table.
All right, we'll take a quick break. We'll do a check-in on Adobe today. Didn't get to it earlier, but it is a mover. It's down near 6%. Rob Sechin on the back of earnings. What's up with this stock? It certainly hasn't gotten the performance that anything else related to AI, almost anything else, I should probably better say, has gotten. They want a piece of the pie. Can they get it?
You know, it's all about monetizing AI, Scott, and I still think the investment community challenges their ability to monetize AI. Is there something that can be bought when you can essentially get it for free? They've delivered on numbers. They continue to deliver every time they report, and yet the stock does not perform well. We are going to continue to be patient because we think this is a stock to own.
All right. It was a big week for software names. Oracle had a big week, as you know. What's your final trade, Rob, while I have you?
Alphabet. It's been the best performer in the Mag 7 over the past month. It's the cheapest as well. And we think they're trying to quiet the bear case around search disruption. I think it's the one to buy.
Shan?
Energy. It was my final trade on Wednesday. I'm not clairvoyant, but on the long-term basis, if OPEC Plus has to put some more supply on the market, that actually eases some of the supply considerations for next year.
Right.
Schlumberger. I mean, I still think you want to own this stock's really cheap.
Weiss?
UNH, I think it's a good trade from here. Not a big position, but I think you make money in it.
All right, good stuff. You guys have a good weekend. I'll see you at 3 o'clock.
Hey, everybody. Welcome to Blue Cloud Trading. It's Sunday, June 15th. We're going to take a look at the markets from the close on Friday, preparing for tomorrow, Monday. And the markets were down, as you'll find out in a few moments when we look at the heat map here, mostly in the red. The Dow was down 1.79%. You'll notice that NASDAQ was down 1.3%, S&P 500 down 1.13%, and the Russell 2000 was down 1.83%. Now, we just saw some clips from the halftime report. In this video, what we're going to do is cover about 18 stocks that were covered. Okay, IBM, Netflix, NRG, Suncor Energy, a few others that you see here in the list. We're also going to take a look at the indices. Okay, and I've added a new ETF that we're going to be monitoring going forward, the DBC Commodity Tracking ETF, because the oil prices have spiked. This particular one also broke a very long trend, as you can see right there. That all happened on Friday. Okay, up 3.10%. So we'll look at that. And we'll look at, what else are we going to take a look at? We'll look at the Mag 7 stocks, except for Microsoft, which happens to be in the members-only portfolio. We'll look at SLVR, CFLT, those are member requests, and some of the strongest sectors. All right, so let's get started here, and let's see what happened again. Basically, what caused all of that? Essentially, you probably heard over the weekend and on Friday after Israel and Iran traded attacks, gold rallied, and yeah, it's not a good thing. Here's what it says. The Dow Jones Industrial Average declines accelerated in afternoon trading after Tel Aviv was hit by Iranian missile strikes in a retaliatory attack. Fears the attack could spiral into a wider conflict had already sent stocks falling around the world early Friday. So, and President Trump, who told the Wall Street Journal that he was read in on Israel's plans, urged Iran's leadership to make a nuclear deal before there's nothing left. That's not good. Investors rushed to assets perceived as less risky. Gold rose 1.5% to a new record, and the dollar strengthened. Meantime, consumer sentiment is improving, a University of Michigan survey showed. Oil prices jumped. Okay, the Brent crude futures rose 7% to $74.23 a barrel. Stocks retreated. So the S&P 500 dropped 1.1%. You can see all the information right there. So let's also take a look at the heat map. This shows us a little bit more about what specifically happened in individual stocks within the S&P 500. Microsoft down 0.82, Apple down 1.38. You can see Nvidia down 2.09. All the semiconductors got hit. The software applications companies got hit. The financials got hit. Look at Visa down 5%, MasterCard down. Google Meta was down. What didn't drop as much were the energy stocks. And you can see them all green right there. Some of the healthcare stocks were up. Tesla was up 1.94. Oracle was up 7.68. Palantir up 1.64. Here's the heap. I'm sorry, this is the, and you know what? Let's take a look at the 1 week performance. That's the 1 day performance from Friday. So let's look at the 1 week. And you'll see it's not as, negative here. But, that was a pretty big drop from Friday. Here is the, what we call the groups scanning from FinViz Elite. What it shows is the strongest stocks, or sectors, sorry, for Friday. And that was energy, up 1.63%. Everything else was down. And financials were down the most, 1.83%. For the 1 week performance, energy, healthcare, utilities, basic materials were up. Financials were down the most, 2.28%. So that's where we're at. And let's take a look next at, we'll start off with the indices, and then we'll get into those stocks that I just mentioned that we're going to cover. We're not going to spend too much time. We are using the Ichimoku indicator. If you are unfamiliar with this indicator, just a brief little quick synopsis about it. The green line that you see right there is the 9 period. It takes the midpoint of the last 9 periods and projects it right there. You get the midpoint of the last 26 periods in the Kijinsen, the red line. We've got the 200-day moving average, that yellow dotted line. We want price to be above those moving averages. We want price to be above the Ichimoku cloud. That's what you see right there. Very visually easy to identify when you're in an uptrend. Price tends to be above the cloud. When it's under the cloud, it tends to be in a downtrend. Okay? Not always. I mean, sometimes it can break under that cloud temporarily and break back above. But generally speaking, it's very bearish territory when you do enter get under the cloud. Next, we also have the Chiku span, that white line right there. That's the closing price. So that was Friday's closing price, and it's projected 26 periods into the past right there as a line form, that white line that you see right there. And what's the purpose? To see where that line is in relation to the candle, 26 periods ago. And if you're not familiar with Japanese candlesticks, I would start off with that first. That's really important to understand how the candlesticks work. Here's just a quick little cheat sheet that I have that you can find on my Twitter page at BlueCloudTrader on x.com. And so you can understand a little bit more about the candles here, what these represent. For example, the opening price, the closing price, the low of the day, the high price of the day. If it's a green candle, all right, that means at the open, that's where the body starts right there for the candle. If it at the close at 4 p.m., all right, if it's a daily candle that you're looking at, that's the closing price. And this just shows how far up the price went throughout the day. If it's a red candle, the opening price is at the top of the body. The closing price is at the bottom. And of course, the wicks work the same way. It shows the high of the day and the low of the day. So you get a quick synopsis of the action that occurred throughout the day. And remember, that's just a daily, I'm talking about a daily chart right here because that's what we're looking at. But same principle applies on a weekly. So instead of, so like if we're looking at this candle right here, for example, Monday would be right there. That would be Friday. Okay. On a monthly chart, the beginning of the candle, I'm sorry, hold on. This would be, for example, the beginning part of June. This is where we're at right now. Okay. June 15th. So far. Anyway, you can apply that on every time frame, and it's going to give us a little bit of insight. And if you see a long wick like this, that tends to be very bullish actually, because it shows, for example, that the sellers pushed the price all the way down to this low level, but then the buyers came in, pushed it right back up, and then you can see how it led to a continuation to the upside. So learning about candlesticks is really important, I think, as a prerequisite before getting into the Ichimoku. But The Ichimoku is pretty simple too. Once you learn the rules of it, and in this case, you can see the S&P 500 on the monthly chart is still in a very bullish territory. We've been experiencing higher highs, right there from the prior high there. This low is higher than the prior low. We're looking again at a monthly chart, and things are looking relatively good. And that's why the sentiment right now has still for the stock market been good overall. But just keep in mind that we're coming close now to a prior high right there. And whenever we reach a prior high, price tends to test to see if it can get through. Sometimes it's unable to. There's sellers waiting right here to take some profits, for example, and it could push the price down. But if it breaks through, then expect a continuation and an expansion to the upside. All right, so let's look again at the daily chart. Now, on the daily chart, you'll notice that price dropped 1.12%. The price gapped down on Friday from that's Thursday's candle, where it was up that day. It dropped down on Friday and closed under. So which means that the body closed under, and closed right there, under the 9-period Tenkan-sen. That is bearish. It could be short-lived. It could be. It depends on what happens next week, obviously. Here's an instance where it got under and then found support at the 200-day. And usually that's what will happen. When price closes under a moving average, it's more likely to actually continue dropping and try to find the next level of support. In this case, with the Ichimoku indicator, the next level of support would be the Kijun-sen, the 26-period. So we could see potentially a drop here of about another 2.3%. So like my software here, TC2000, has a measuring tool. So wherever I put this cursor, you'll notice a percentage change, right? So right there, it's like 0, right there, down 2.25% to reach that level. So that could happen. We'll see what happens there. But if you like the software, also just very quickly, if you guys want to look into this, you will find a link right here under 9 more links, and you can get a $25 coupon for the software. If you click there, it will pop up this screen. Just scroll down, and there's the link, $25 coupon for the TC2000 software. Click on that, enter your email right here. Here's the information about how you get your coupon. Find out about the pricing. I would recommend the gold membership over the other 2 tiers. Anyway, let's get back, folks, to what we're talking about here. So, yeah, S&P 500 could potentially drop next week. You can see the volume here spiking a little bit. Let's take a look at the Qs. QQQ ETF, also same situation, right down 1.26% also. Where it was nice and steady here, that gap down, that's not a positive thing. And if you see volume increasing, and you see I also use the directional movement index. If that green line, which is the positive DI9, crosses under the red line, that's going to be very bearish. Hasn't happened yet, but it is declining, and the red line is moving up. So that's not a very bullish scenario. How about FEZ? This is the Euro Stocks 50 ETF. This one also dropped 2%, but found support right at the 26 period. Okay, so we'll see what happens there too. But this one here did, in fact, we've got the Kijun-sen. We've got the negative DI9, this little red line here, crossed above the green line. So that's a little bearish. Let's see if it can hold its hold right there. That's very important. DBC, on the other hand, this is the commodity tracking ETF, Invesco DB commodity tracking ETF. You'll see that where it was finding resistance in the past, and by the way, if you look at the weekly chart, where it was in a downtrend for quite a while, the last time, in fact, that it made sense to be holding this was, you'd have to go back to this date right here, back on June 17th of 2022. Now, what happened on that date is price, as you can see right there, it got under the green line, the 9 period. Once it got under the 9 period, it stayed under the moving averages, stayed under the Kijun-sen. Okay, as you can see right there, got into the cloud, that's bearish as well. Got under the cloud, that's also bearish. So you don't want to be adding any new positions on an ETF, all right, or a stock if price is inside the cloud, under the cloud, under the moving averages. All right. Now, what's happened today, or I'm sorry, on Friday, with this weekly candle is something relatively new. There's some interest now coming back into the commodities. And so DBC popped, it said, closed for the first time. Well, I take that back. It did close over here above temporarily and then dropped right away. So who knows? It could be short-lived, right? We don't know. But I think there's a higher probability that the commodity tracking ETF is going to do well based on the scenario that we're in right now with the geopolitical situation. It's unfortunate what's happening with the wars and stuff, but oil prices will most likely go up, and so will gold in this scenario. And the next level of resistance will be the 200-day moving average, which is lurking there. So I wouldn't be shocked to see this move another 3.1% or so to reach that level. And it might find some resistance there and then pull back, but it could also just break through. We'll see. That's the weekly. Here's the daily. You can see the huge interest and demand now for this ETF from what happened, right? It got above the 200-day moving average right there, and then it gapped up, okay, from Thursday to Friday, a big gap up. It was up 3.1%, and if we measure from, say, that price right there, you can see that right there, 3.1. So where's it at now? It actually broke this. Did it break that high? Let's find out. I'm curious. And by the way, it also broke this symmetrical type triangle right here. So we've got a higher low here from the prior low. We broke this long-term trend line. In fact, it gapped right above it, which is kind of interesting. ADX is moving up. That means that the momentum is increasing. But I'm curious to see if we were able to clear this high. That high right there is 2266. And we are at 2265, just 1 penny under that prior high. So it could pull back, possibly, if there are some positive news. But if there's negative news on Monday, expect it to continue moving up, and then it will probably move another 2% or so to this prior high. All right, let's keep going with DIA. That's the Dow Jones ETF. And this one also is not looking that great. It pulled back, found some support at the Kijinsen. And you can see that we've got a crossover happening here on high volume. So that shows even more significance when something like that happens. When you see a high volume bar, that means there's more trading taking place as it pulled down under the 200-day moving average. Will the Kijinsen be able to hold it? Many times it does. Going back in time, you can see it held right there. Okay. But it doesn't always. Right there, it broke through and continued to drop. How about the Russell 2000? Russell 2000 also found resistance at the 200-day moving average, which is normal when you come from under it. It's going to find that resistance, and it dropped now 3 days in a row. Finding support of the Kijinsen, though. So we'll see what happens again with this one. What about, and by the way, the Russell, if we look at the weekly chart, is still under the Ichimoku cloud. Okay, so that's very bearish, actually, for the Russell. The VIX, on the other hand, let's look at this one here on the daily chart. It was up 15.5%. And this represents fear in the market, essentially. And so it spiked up a little bit. Now, it also popped in right above that 200-day moving average, and it's at a level of 20.82%, which is still relatively low. Okay, so, but if there's some more craziness that takes place related to Iran, Israel, more stuff related with, Russia and Ukraine and all of that, you're going to see this thing start to spike up again. Or it could be something related to the tariffs, of course, those are still in play. And we don't know where that is heading quite yet. Still a lot of unknowns in this market. And that's why the market's been hesitating. I think a lot of people want to be in the markets, but it's also, there's a little bit of fear of jumping all in. We don't have enough positive things happening in the world to suggest that the stock market should be, going gung-ho, right? So we have to be very selective, which is what I do. And so, like in the members only videos that I produce, I only bring up the strongest stocks that are showing strength on both the weekly and the daily time frames. And I try to focus on stocks that have that are in a strong sector. And so I did a video today, actually, that you guys might be interested in checking out. It's this one right here. 2 hours ago, it's actually a pretty long one. Probably one of the longest ones I've ever done. An hour and 20 minutes. And so I cover my entire portfolio, but I also share about 20 stock ideas, right, for this coming week. And the majority of them are in oil, basically. Okay, so a lot of oil companies that are showing a lot of strength. I do, some very thorough analysis over the weekends, and I try to share all that with the members. How do you become a member? Basically, you have to click on the join button, which is right next to the subscribe button. It's free to subscribe to the channel. I'll pop up in your subscriptions. But if you want to get the access to these videos here, you do have to hit the join button right there. And you'll see that there are 3 tiers here. You need to select either Blue Cloud Trader, which would allow you to access those member videos, or Blue Cloud Legend level membership, where you'll get those exclusive videos. But in addition to that, you'll also get daily trade updates on the stocks that I'm holding. So what I do is I post them, and you'll have access on that every day throughout the week, Monday through Friday. Before the market closes, I share my trades, like, which ones I added, which ones I closed out of, that sort of thing. And then I do a summary over the weekend. Okay. All right. Now let's, what are we going to do? Oh yeah, we got to get back to what we were just talking about here. IBM. So IBM is one of the stocks that they talked about on the halftime report. This one's pulled back down 1.36%. It's still a very strong chart on the daily chart. Netflix also looking pretty good still, but it's kind of stuck in between the 2 moving averages. Again, it's really easy. That's the beauty of this indicator. Very simple to identify where the price, if the price is above the cloud, like I said, and the Kijinsen, and it's been in a strong uptrend, that's what you're looking for. How about NRG? This one has pulled back under the Tenkan-sen, and but it could be also developing what I call a, just a little bit of maybe like a bear type flag or something like that. Let's see here. Yeah, I would say that almost looks like a little bit of a bearish flag, pattern. So if it breaks through and can, that trend line that I just drew there, I think there's a possibility that this thing could continue, obviously. Utilities should do well in this environment. They're not going to really be affected by tariffs or, look, it was up 0.69 on Friday, for example. So there you have it. SU, another oil and gas company that popped. All right, I was up 4.78%. They talked about Suncor Energy on the show. Look at the volume coming into this one. It's broke through this prior high, but it's probably going to find resistance at 41.94. That's a nice target there to watch for. Adobe Systems is software infrastructure. This one pulled back on high volume. It's not, came back into the cloud. So that is rejecting the idea of continuing to the upside. So after this little consolidation right here, where price was just kind of stuck for like a few weeks there, now it's showing more weakness. And so there's, it doesn't look that great. I don't like the directional movement index. I don't like what I'm seeing with the volume. It's still under the 200-day moving average, and so that's not good. Okay, AXP is another one that I'm not a big fan of. It was down 3.42%. That's American Express. You can see it dropped and closed under the Kijinsen, but finding probably support here at the 200 still. PNGAY is the Ping An Insurance Group. On the daily chart, you can see that it is finding some support of the Kijinsen. And we do have a bullish cloud here. I don't like this chart that much. One of the reasons is the Tenkan-sen is still, the green line is still under. That's the faster moving average. Is still under the slower one, the Kijinsen. So that's not conducive yet. But if it crosses through, then it will be a lot stronger potential for this to move up. DHR. Danaher Corporation. This is a healthcare sector, diagnostics research. You can see that it's been in a down trend for a very, very long time. And just recently on the daily chart, it popped above the cloud. Now it's pulling down a little bit under it. I'm going to guess that on the weekly chart, it's looking pretty bearish too. Yeah. So one of the other things that you can do is use both time frames, the weekly and the daily, to help assess the strength of the stock. All right. Because if you're looking at just the daily, you want to just trade it based on that time frame. You can use that in the 2-hour, for example, to help to, get a more optimal entry point and exit point. But personally, I like using the weekly and the daily time frames. And I always like to look at other time frames as well, but I generally make my decisions based on the weekly and daily. All right, TMO is the Thermo Fisher Scientific, and this is diagnostics and research industry in healthcare. Not looking good. I'd stay out of that one, down 3.03%. So this is how you can quickly assess, all right, this thing is obviously not in demand, the stock. It's been declining. It's under the cloud. Very simple, really easy. Nothing major to think about here. Just skip it. Why consider buying that stock? Look for the ones that are starting to show some strength, maybe popping through. This one here just popped through Eli Lilly, but it's still stuck under the 200, so I wouldn't be jumping there into that quite yet. It was up 0.90% today. I'm sorry, on Friday. Here's a weekly chart. It looks like it's going to possibly break through the cloud too. This one was Kevin Simpson's final trade back on March 13th. So, what about Chime? Yeah, I guess this is Chime Financial. This is just a really new, stock that was just introduced on Thursday, June 12th. You can see like it opened right here, moved up a little bit throughout the day, and then dropped. It had a big drop, and then it's having a big drop the next day. So that's why it's not generally a good idea to buy a stock when there's an initial public offering, okay? When it first gets introduced to the markets, because you don't know exactly what's going to happen. There's a lot of volatility here. I mean, think about the drop there. From this point down to this level here, that's a 19% drop in just 2 days. All right. UNH is also not looking good. Look at the daily chart. Still in the downtrend, still into the 26 period. ABBV is inside the cloud. I'd skip that one too. It's not ready quite yet. APD, which is Air Products and Chemicals, that one's still stuck inside the cloud right there. Nothing to do. Circle Internet Group, this one was up 25.36%. Another stock that's very volatile right now. Not enough information. There's nothing, no earnings reports. There's nothing above here to basically help us identify where this price should be. It's at $133.56. So I'd skip that one. Voyager Technology, same thing here. This is in the aerospace and defense. It was up 9.84%. But as you can see here, if we look, let me switch it to a 2-hour so you can see what I'm talking about. From this point back here on June 11th, when it was introduced into the market, it's dropped 22%. If I hover my mouse there, you can see about almost 22% is where it's at. Down. IYE, the energy sector ETF. This one, of course, is looking pretty strong here in the 2-hour time frame. What about the daily time frame? Yeah, also popped above the 200-day. Did form a reversal candle. That's a hammer. So if you see something like this type of candle, and it forms after a move up, like you see right there, that is bearish. Let me show this on the cheat sheet here. Got to go to bearish single candle patterns. There it is. So after that move up, you can see that little red body with a long wick at the top. That's called the hanging man. And that's what we have right here with the energy. Now, you can't put all of your trust that this is going to definitely pull down to the downside here. It could certainly continue moving up, but this is not a bullish candle. That's all. Everything else is looking pretty bullish. The ADX is still moving up. Volume is increasing. So what I would be doing is watching the low and the high of that candle, see where it's going to be on Monday, throughout the week, and you can make an assessment from there. SLB is in the energy sector, oil and gas equipment. You can see that one's up 1.88%. It's inside the cloud. It's not quite ready yet for a buy, in my opinion. It would need to still break through some levels, right? You get the cloud here, that prior high, that 200-day moving average. All right, let's keep going. Mag 7 stocks, NVIDIA, stalling at that 143.44 level. It's been in a consolidation stage for a little bit. So we'll see what happens for the last couple of weeks now. Google pulled back, popped its head above that Tenkan-sen. I do know that Google on the weekly chart has been struggling a little bit. So it's got that, it's called a doji right there. Means that the opening price on Monday was the same as it was on Friday. So 5 days later, price of Google was at the same exact level, did not move much. So what do you do in a situation like this? I would hold off on it quite for the time being. Tesla, yes, it was up 1.94%, but if we look at this daily time frame, you can see it's in a downward channel. Okay, we've got a lower high here from the prior high, and we have a lower low here from the prior low. So that's a downward channel right there. Amazon popping its head above that Tenkan-sen once again. This is looking more bullish than those other ones that I just mentioned. But on the weekly, Tenkan-sen is still under Kijun-sen. So we don't have confirmation on the higher time frame. Apple on the weekly is still under the cloud. I'd skip Apple. There it is on the daily. Not looking good. I haven't recommended Apple for a long time. I mean, it's just, in shambles, really. And it has a lot to do with what's going on with the tariff situation. And it's also being, it's being targeted. Let's call it what it is. This as a company is being targeted by the Trump administration. They're going to be, the expectation is what? That we're going to be building Apple phones here in the United States. I mean, it's just not even a possibility, honestly. It's just not going to happen. The cost to do that would be exorbitant. And phones and Apple phones would end up costing about maybe double what you're paying or triple, potentially. And it would take a long time to build the manufacturing plants to be able to do it. And who's going to work there? I don't know. I'm just saying, it's just like, we don't even have a huge unemployment problem here in this country. So it's kind of strange. It's strange what's going on. Meta on the daily chart. Look at it pulling back under the Tenkan-sen right there. And on the weekly chart, it doesn't look that terrible, but Tenkan-sen is still under Kijun-sen. I'm not ready to jump into Meta quite yet, personally. And what about the member requests? SLVR, this one is, it looks like another kind of flag type pattern, a bullish flag is right there. You can see on the daily chart. So we get that move up. We've got this little kind of flag building, and so there's a good chance that this one here will pop, especially since it falls in the silver miners and physical silver ETF. In this environment, this should be doing pretty good. It was only up 0.07% though on Friday, and the volume here has been declining a little bit. But if we get we could get a spike. We'll see what happens there. The weekly chart is still pretty bullish, but this is, we had a doji. Again, these are reversal type candles. And gold seems to be doing much better in this environment. CFLT is Confluent Inc. On the weekly chart, it's currently under the Ichimoku cloud. So as you know, I wouldn't be recommending this one here because it's still under the cloud. It's under the Kijun-sen. You can see the 200-day moving average starting to form here. This is a relatively new stock. It's only been basically tradable since 2021 back here. Had a big spike move up. And then from this high of $94, it's dropped about 75% to $23.65. And on the weekly chart, it's under the Ichimoku cloud. So I wouldn't be trading this one. Here's a daily chart. It is under the 200. It's inside the cloud still. It can't seem to get through. Let me see. Did it get through that level? No, it did not. So see how it stalled at that prior high right there? You can see these multiple candles where it was unable to break through that. And you get that 200 and you get the cloud. So I'd hold off on CFLT. If you're trading this, if you have a position in this, how would you manage it? This is what I would recommend. I would probably switch the time frame down to a 2-hour or a 4-hour time frame. Right now, the bottom line is on the daily time frame. Technically, we have established a higher high here from the prior one. Okay, so that's good. We have a higher low here from this prior low. We just can't seem to get through that other high right there. And so if you switch it to, say, a 4-hour, it's going to look more bullish, right? And so you can trade this and manage it on the 4-hour or on a 2-hour time frame. You can see how it's popped above the cloud. It's now pulling back into the cloud in the 2-hour. Here's a 1-hour time frame. You can see it's starting to weaken a little bit, down 3.11% on Friday. And let's look at the 30-minute. All right, so you can see that obviously since June 6th here, where we're around that time, where it reached a high there, it has declined, right? And so we're in a downward channel on the 30-minute time frame. So that's what I would be doing, is watching that 30-minute. You can see that it's staying inside the channel. If it breaks above, okay, then there's a possibility that it can expand again. What about, let's see, GDX? Let's take a look at that. That's the gold miners ETF. It was up 1.74%. And that still looks pretty good. There's nothing, I'm sorry, that's a 30-minute. Let's look at the daily time frame. Yeah, that looks good too, obviously. We had broken that downward channel, and you can see that rise now that's happening. So that's very bullish, right? We've got ourselves a nice uptrend, an upward channel happening. USO, which is the United States Oil Fund, there's that big pop, up 6.89%, broke through that prior high, broke through these highs here as well. The next resistance level on a daily, let me look at the weekly. Okay, the reason I have this level of 83.41 is because you'll notice right here at this, it's based on that level. Notice how price reached this level and declined, right? Reached that same level again when it expanded and dropped. Came close there, dropped. Literally came here, dropped. Okay, so 83.41, very important level to watch. It's tested it so many times that my intuition is telling me that this time it's going to be something very different. I also want you to look at the character of this candle. When you look at it in comparison to all the other candles, the size of it, it's significantly larger. Okay, we're looking at a weekly chart, which means that there's a lot more buying happening. And if you look also at the volume down below, look at the volume bar compared to all these other candles, right? They were all relatively small in comparison to this. We also have another thing that's positive. We can see that the positive DI line right there, that little green line crossed above the red line. So when you take all that in together, it's telling me, it's giving me a hint that there's a higher probability that it's going to break this time. I can't guarantee it. Nobody can guarantee what's going to happen, but that's where I think it's going. Here's a daily chart. We'll see if I'm correct on that. All right, let's look at the next one. This is the XLI Industrial ETF. You can see it's been stalling for a long time now, for about 4 weeks or so, right? 3-4 weeks. It's kind of stalling. It's just going sideways. Technology, same thing, right? XLC, Communication Services, pulling back for 3 days now in a row, but this one looks a little bit more bullish, the Communication Services. Utilities is also going sideways right now. SMH, Semiconductors, pulling back, but still above the Tankinson and Keejensen. Looks pretty strong overall. They didn't look that great on Friday, though, with that higher volume bar. GLD Gold, excelling in this environment. So on Thursday, maybe you guys remember me talking about this in prior videos. I said there was a bull flag that was developing here. I said if price breaks through that trend line right there, expect an expansion. That's what happened here on Thursday. And look, it gapped up. And I wouldn't be surprised to see it gap up some more next week on Monday or Tuesday or Wednesday, whatever. The volume is now Look at it right there. It's increasing. What that means is more participation. There's more trades. This is the number of shares that are traded each specific day. Each one of these. Okay, and you can see 16.6 million shares of GLD were traded on Friday. In comparison, back here it was around 8. So half of that amount back on Monday. So double the amount of trades now. So it gives you some insight of what is happening and the demand, which is, of course, what's going to lead to price to continue to move up. Demand and supply. XLB, I'll run through these very quickly. The XLB is under the 200-day moving average, but above the cloud on the daily chart. Bitcoin is just kind of stalling here. It's been stuck in this little range for a little bit, around 105 to 110,000. IBIT is at the ETF for Bitcoin is kind of like stuck in here too at 59.74. Let's see, real estate is kind of consolidating for a very, very long time. It's right under the 200. You can see that right there. Let's see, UNG is natural gas. Nothing good happening here on the daily chart. Whoops. US dollar up what, 0.26%? Not a big move up actually. A little higher volume, more trades happening. It did gap up, but immediately started getting sold off right there. So you can see that the price from Thursday, it did gap up to the Tenkan where it found resistance, and then the selling started to ensue. If we look at this on a 5-minute chart, you can see that. So here's the 13th, right, Friday. The gap up from the prior day, right there. It gapped all the way up to that level and dropped. And then moved a little bit more and dropped some more. So it's under the cloud right now on the 5-minute time frame. Let's take a look at XLY. That one's kind of steadily moving upwards. This one looks like a nice, I don't know, it's just like a consolidation. And if it breaks through that prior high, it's going to probably continue moving up. Weekly chart, it is, yeah, it's just consolidating for 5 weeks in a row. That's all. XLV drop, it's under the cloud. Stay out of that one for now. The healthcare ETF, because it's also reaching a level of resistance at 200-day moving average right there. On the daily chart, it does. It's had a little move up, but look where it's stalling, right at the cloud. XLP also just not looking that great. It's just everything's just sideways action. Everyone's concerned. You know, April 3rd, this was the date of the tariff announcement. I mean, if you look at it, we're basically still in the same place. Why? Because here's the bottom line, right? Like they've been saying. Think about it. If you were the CEO of a company and you have no idea what the tariffs are going to be, you can't plan anything about your business. You don't know whether you should be hiring new people, new employees. We're basically in limbo right now. Nothing can be planned without having consistency and having an accurate assessment and plans of, like to identify where things are going. And if you got tariffs, unexpected tariffs that can pop up tomorrow at the whim, right, of the president, how are you going to make plans based on that? You can't, right? So that's why we're stuck. And we'll continue to be stuck as long as that power is maintained by the president, in my opinion. So I think they need to strip that power away, basically. Once they strip that away from him, I think the market's going to take off like you've never seen it take off before, right? Energy. Look at energy, up 1.74 XLE. Again, there's the hammer right there. That's doing pretty good on the daily chart and on the weekly chart. You can see that big candle. We're still under the cloud technically here. But like I said before, I do like, the increased volume. It looks like the positive DI is going to cross through. I wouldn't be adding this position quite yet, though. I'd want to see some confirmation on this ETF. Now, like I said before, I did add a number of positions related to oil, but that's based on looking at the individual stocks versus the entire ETF. Let's keep going here. XHB is home builders. They've been in a, downward channel for a bit now. You can see that in a sharp downward channel too. It's not like, look at this. Okay, we're under the cloud. It came up, retested over here, and then dropped again. Nothing pretty with XHB. And then copper, this is where we were at the beginning of the year. We're up 9.84%, but we're still stuck under the cloud. On the weekly, here's the daily chart. You can see we're basically in the same levels that we were at back in March. So here's January. It's just sideways. All right, and that is going to do it for this video. Hope you enjoyed it. Hope you learned some things. If you like the channel, don't forget to hit the like button. Don't forget to subscribe. It is free to subscribe. Hit the notification bell so that you know that my videos are popping. When they do pop, you can get a little notification up there. And the other thing, consider joining. And if you like the software, check it out. Click that 9 more links right there. Scroll down, hit that. Check out my X page. I've got a Patreon page with other videos there. Tons of stuff. All right, guys. Thanks for watching. I will catch you all in the next video.